welcome back. I am here today with a very special guest. I have Melissa Coley from Mead, Coley and Company CPAs, and today we're going to be talking about tax tips for real estate agents. Say that 10 times fast. Tax tips for real estate agents.
That's too fast for me.
Okay. So, Melissa.
Yes, Stephanie.
Real estate agents are considered independent contractors.
Correct.
So what does that actually mean, especially in the tax world?
Well, in essence, that basically comes down to the fact that independent contractors are self-employed. And by being self-employed, they are liable for taxes above and beyond what employees are liable for.
That sounds fun.
It is a lot of fun.
So that goes into the next question then, is are taxes withheld from their commission checks that they earn?
No, and that is exactly why they are not, because they are independent contractors. So independent contractors actually are still liable for taxes, which they have to estimate throughout the year based on the net profit that they generate in their business, and then pay in those taxes throughout the year to both the IRS and to Franchise Tax Board.
Okay, so it's a little bit more complicated than just being a normal employee.
Definitely. As an employee, you get a W-2, you're set. There's taxes deducted from there already, no problem. As an independent contractor, you have to keep track of the income that you generate, and then you have to also account for all of the expenses that you incur. So as a real estate agent, there is multiple different types of expenses.
So getting into expenses, with realtors, real estate agents, you hear a lot of people, oh, I'm going to deduct this, I'm going to deduct that. What types of expenses can real estate agents typically deduct?
I think the most common ones for real estate agents are mileage.
Okay.
Because they're driving around everywhere. They're going from open house, going to go see clients, all of that good stuff. But there's definitely a lot more. There's office supplies. There's business cards, anything that they use for marketing. Specifically for real estate agents, MLS dues.
Yes.
Anything that they have to purchase for signage, open house expenses, when they purchase food for open house, for open houses, or when they purchase decorative items for open houses.
Yes.
All of that is tax deductible.
Now, do they just keep those receipts like in a box, or use one of those cool apps where you can track those things? What's the best way to properly claim those as deductions?
A cool app is definitely better.
You don't want a box of receipts.
It keeps track of everything so much neater than a box of receipts. And at the end, it makes the tax preparer's job easier, and then the real estate agent themselves are not wondering if they missed a deduction because they can't find it in that box of receipts. Nobody wants to sort through a box of receipts.
No. Please, no. So when I was a full real estate agent, strictly just 1099, one of my weaknesses was tracking mileage. What's the best way to do that to ensure, again, the proper way of being able to claim that?
They have cool apps for that too.
No way. Technology these days.
Yes, at its finest. So the apps, there are mileage apps. I can't recommend any, but they have them where you basically log in when you're setting off to your appointment.
Okay.
And then you log out when you get back from that appointment. Anything in between, any miles within that time frame is considered business miles. Check it out, look at one, try different ones, whichever one is most convenient for you. And the nice thing about apps like that, because you're using them for business, the cost of that app is also considered a business expense.
Wow. Okay.
Whether that's for mileage tracking, whether that's for accounting tracking, definitely considered a business expense.
I did not know that. So let's talk about gifts. Typically, a transaction closes and agents were like, we want to get our clients a great closing gift. Where does that kind of fall in line as far as a possible deduction?
Gifts across the board per IRS regulations are only deductible up to $25 per gift to each client. So anything in excess of that would not be considered tax deductible. And I understand $25 is very minimal.
2 cups of coffee these days.
A gift card, $25. Woohoo!
Yeah.
But that is the regulation. That is what they go by. Sometimes there are gifts that could be, there are items that are purchased for clients that are in excess of $25, and that you would have to discuss with your tax preparer, kind of see if there's what the specific criteria behind that would be to make it maybe fall under a different expense category.
Got it.
Whether that be promotion, whether that be marketing,
got it.
but definitely something to look into.
And consult with your tax.
Definitely, yes, because you want to be sure that it falls under the correct criteria to be categorized as something other than a gift.
No kidding. Keeping along with taxes. So you mentioned at the very beginning, as 1099 independent contractors, taxes are not withheld from each paycheck or each commission check. How much, when realtors are getting ready to, close their first transaction or whatever it may be, how much on average should they be putting away for taxes? And I know it depends on how much they make, but is there maybe like a percentage at the very least put away into a savings account so you have that money available?
At the very least, I would recommend 15.3 if you want to be exact.
Wait a second, are you a CPA?
15.3%. Only because 15.3% is the amount of self-employment tax that is going to be assessed on your profit.
Okay.
Now, in addition to self-employment tax, you're also going to have to pay federal income tax as well as California state income tax, which is a whole nother rate, and that's dependent on tax bracket levels and sources of income and all of that good stuff. So again, good reason why you should have a tax preparer.
For sure. Now, there's ways to pay your taxes throughout the year, so it's not just writing one big payment, when your taxes are due, correct?
Correct, and that's actually a requirement. To make estimated tax payments is a requirement because the IRS doesn't want their money at the end of the year. They want their money gradually throughout the year as you're making it.
Yes.
And so, yes, it would be 4 installments made throughout the year, which also helps you as a tax preparer, as a tax, individual at the end of the year, because then you're not paying lump sum.
Yeah. So that definitely helps. So let's talk about retirement. So again, there's no retirement set up, for realtors typically. What are some ways a real estate agent could possibly save for a retirement account?
For retirement, let's see. There are a couple of different ways, but I think the best for any self-employed individual would be a SEP IRA.
Okay.
And that is based on an individual's profits from their business, so income minus expenses. You can contribute up to 25% on that, so that's your best bet. There are other plans that maybe cost less to maintain, such as a traditional IRA.
Yes.
But there are other stipulations to that you would have to follow. So
definitely.
Yeah,
there are options.
Yes, definitely. There are options.
Fantastic. So I have one last question, and I'm pretty sure I know the answer. Is tax preparation for an independent contractor, real estate agent, something that they can do on their own? Or do you recommend them using a professional?
Good luck with that. According to H&R Block, everybody can do their own taxes, or is that TurboTax? That's
Probably
TurboTax.
both. Probably both.
No, I do not recommend that, especially because tax laws change regularly. You may be missing something if you do it on your own, and really, your job is not to prepare a tax return. No. You are in the business of doing real estate, and to do taxes is just a whole other field that you'd rather just leave it to the professionals.
I could not agree more. And for those of you listening or for those of you watching, we've got a fantastic CPA here. Her contact information will be in the show notes. But Melissa, thank you so much for sitting down with us,
Stephanie,
and shining some light on tax tips for real estate agents. You somehow make tax talk less boring than what you would normally think. So thank you.
Well, you're welcome.
Alrighty.
It was nice having you.
Thank you very much, and we'll see you next time.